Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Before we dig in, if you find value in this video, remember to smash the like, ring my bell, hit subscribe, and leave a comment in the YouTube video comment section. Let's dig in and take a look at the Perpetual futures, Bitcoin's Perpetual futures in the last 2 years. And let's see what kind of trends we can find. Let me get my highlighter up here. Okay. So at the top here, most of you are familiar with this chart. This is from coinalyze.net. At the top, we have the BTC right here, Perpetual futures. And at the row below that is the aggregated open interest using stable coins like USDT, USDC, etc. The row below that, this is aggregated open interest using coin margin, which is coins like Ethereum or Bitcoin. Down below that, this is the aggregated predicted funding rate. This is what, based on algorithms, what they predict the funding rate will be. Below that is the aggregate funding rate, the actual. And down below here, this is the spot aggregated cumulative volume delta. It just means supply and demand. If the blue line is going up, that means supply is increasing. If the blue line is decreasing, then demand is decreasing. And back here, this is February 2020, and over here is current time. So what patterns do we see? Let's start with aggregated open interest stablecoins. And that's using stablecoins. Okay, you can see that in general, you want to follow. There's a vertical line. I'm not sure if you're gonna be able to see it, but there's a vertical line that goes up and down across all these panels. So as open interest using stablecoins increase, it kind of pretty much follows the price line, but more in a leveled out form way. You see that? It increased as Bitcoin's price increased, and it drops when Bitcoin's price drops. So it kind of, there's correlation there. Except for this period here and a couple other periods. But in general, they correlate. So let's go down to the one with using coins, the open interest using coins like Bitcoin or Ethereum. It kind of follows. It does have some deviations, like right here it drops more than it dropped more here on open interest than it did in the stable coins, but in general it follows pretty much similar pattern, more flattened out at times or more volatile, but pretty much similar pattern. Now let's take a look at the I'm going to skip predicted fund because that's what they predict's going to happen. I'm just going to go to the aggregate funding rate. Let's see. So back here, you can see the funding rate. Overall, what's the theme here? Overall, we see that funding rate tends to be positive because we rarely see it flip below that middle line, which is 0. Overall, in the last 2 years, it's been more positive than it has been negative. We got a negative period here, March 2020. Guess what that was? This was when Bitcoin dropped for 5 weeks because of COVID-19. And right here, this is June, around June period, June 14th, around there. This one right here was July. We had crashes there. So what do we see? We see that it's mostly funding rates positive. It's more positive in this period here and right before March here. So overall, that just shows that Bitcoin is long-term bullish. Okay, so right here in this period here, Bitcoin's rising, and it hits its all-time high and then drops down. Guess what funding rate did? Funding rate was extreme positive compared, like extreme here, like more than any other period in this 2-year mark, more than even now. even when we hit the all-time high of 69,000. You know, when we hit 64K as the max. I mean, look at that. So that's telling you something. So during the periods where we had the red areas, we know that's during the crashes. But guess what? We had a crash here. Look at that. Not a lot of negative funding rate here as we had here and here and here. But guess what? It's peaking negative here in our present time. What does that mean? I don't know. We gotta wait and see. It could be one of these. So overall, we had this crash here from all-time high down to 33 roughly, and funding is still aggregated funding is still mostly positive, more neutral, but mostly positive. That's strange. In all these crashes here, they were red here. All right? So what does that tell us? Let's go down. Let's go down further. You can see here, let's look at supply and demand. Back here around April, supply, the blue line, was at its max pretty much. And ever since, it's been on the decline. You can see it here. I'll zoom in because it's harder. Here's April. You can see it's been on the decline right there. And recently slightly picked up, but it's leveling off. So what does that tell us? That means that demand was increasing during this period here, and then it started tapering off. Just from here on, it tapered off, even though price was building up here. So you combine all these factors together, what does that tell us about the current time? Well, demand is lower than the previous period when Bitcoin was very bullish back here, right? Very bullish there. Funding rate was positive. Demand dropped, you know, and funding rates pretty much slid off, but it never built back up to where it was. It's been kind of, and then if you look from this point, which is October, it's been on a downtrend. Funding rate's been on a downtrend. It's recently, well, not this one. Let's look at this one. This is predicted. This is the actual. Actual, it's been dropping. Funding rate's been dropping down and down and down. So it's more bearish. Like this right here, October. Remember, October was when we were building up to its all-time high, and then in November and December, that's when the market started tanking. And look at it. Funding rate has been dropping. So I know there's a lot of bullish news out there about how the market could be recovering, and it's, crypto Twitter is very bullish. Nah, we look at this. We have sliding demand, even though it's slightly picking up recently, but not at an accelerated rate. Funding rate still dropping low. When funding rate is positive, that means it's bullish, right? Because longs are paying a premium to the shorts to be able to hold their positions. That means the market's bullish. If you look at this, the market's not bullish. The market is trending down. Funding rate's trending down. And that happened even before we hit the all-time high. And right here, if you look at open interest ever since the all-time high, it has been decreasing in both stablecoins and coin margin using BTC and Ethereum, etc. So I think it's really important to make sure that we keep an eye, zoom out and keep an eye on the overall trend. I know I focus a lot on the 8-hour and the daily stuff too, or the weekly stuff, but it's important to understand what the trend is telling us over time. And a 2-year mark is it's a good trend. That's a pretty macro trend to take a look at. So I hope that added value for you. Why did that not appear? It's so strange. Oh well. If this added value for you, feel free to smash the like, ring my bell, hit subscribe, and leave a comment in the YouTube comment section. Appreciate it. See you in the next video later today. Peace.